You know, every single time you tap your card or hit that Buy Now button online, there's a huge chance Visa's working its magic in the background. Well, they just dropped their 2025 earnings report, and believe me, these numbers tell a really fascinating story. It's not just about Visa, it's about the entire global economy and where money is headed. So let's dive in and break it all down.
All right, let's just jump straight to the jaw-dropper number 40. $40 billion. That is Visa's net revenue for the year. I mean, just to put that into perspective, that's bigger than the entire GDP of some countries. And remember, this isn't even their total sales. This is the cash they've got left after paying out billions and billions to their partners. It really sets the stage for just how powerful their year was.
Okay, so that 40 billion is the headline, right? But what does the full report card look like? Let's take a look. When you start to dig into the key numbers, you see this story of really consistent, pretty impressive growth all across the board.
Yeah, so that $40 billion number, it wasn't just big, it was growing. We're talking about an 11% jump in net revenue compared to last year. Now look, in any economy, that's a solid number. But in the economy we're in right now, seeing double-digit growth for a company this massive, that is a huge, huge signal of strength.
Okay, revenue is great, but what about the actual profit? You know, the bottom line. Well, here we're looking at something called non-GAAP net income, and it came in at a massive $22.5 billion. Now, don't get hung up on that non-GAAP term just yet. I promise we'll circle back and explain it. For now, just think of this number as their business-as-usual profit. It's a really key way to check the company's core health.
And here's the number that investors really pay attention to. Their non-GAAP earnings per share, or EPS for short. It grew by a super robust 14%. What does that mean? It just means that for every single share of Visa out there, the amount of profit it generated went up a lot. And if you're a shareholder, that is exactly what you want to see.
But it's not just about the numbers. Listen to what Visa's CEO Ryan Ick had to say. He didn't just pat himself on the back for a good year. He immediately started talking about the future. And check out the words he's using. AI, stablecoins, tokenization. This isn't just some corporate buzzword bingo, you guys. This is a massive signal that Visa sees itself as a core technology company now, way more than just a simple payment network.
All right, we've seen all these giant numbers, but the big question is, how does Visa actually make that $40 billion? Let's pop the hood and take a look at the engine that drives this whole thing.
So, Visa's engine is definitely not a one-trick pony. It's got a few powerful cylinders. The biggest piece of the pie, a whopping $20 billion, comes from something called data processing. That's basically the tiny little fee they get every single time a transaction is approved. Then you've got service revenue, pulling in another $17.5 billion. That's based on the total amount of money flowing through their system. And finally, a huge $14.2 billion from international transactions. When you put it all together, you get this incredibly strong and resilient business model.
But wait, there's a catch. To get to that $40 billion in net revenue, Visa has to spend a lot. Just look at this number, almost $16 billion paid out in what they call client incentives. What is that? Well, you can think of it like a supermarket paying for the best shelf space. Visa pays banks and other partners to make sure it's a Visa card in your wallet and that when you use it, the transaction runs on their network. It's a gigantic expense for sure, but that's the price you pay to be the king of the hill.
Okay, so remember earlier I mentioned that non-GAAP profit thing?
This is a really, really important concept if you want to understand what's actually going on in an earnings report. So let's take a second to clear up the difference between the official numbers and these adjusted ones.
The easiest way to think about it is like this. GAAP, that stands for Generally Accepted Accounting Principles. That's the official, by-the-rules score, no funny business. Non-GAAP, on the other hand, is kind of like the score after you adjust for a weird, one-time event that's not going to happen again. Companies use it to say, hey, this is what our performance really looks like without all the unusual noise.
And wow, this slide right here shows you just how big that difference can be. Just looking at the fourth quarter, their official GAAP profit was $5.1 billion, but their preferred business-as-usual non-GAAP number, $5.8 billion. That's a $700 million difference. So what's going on there? Well, the main culprit is a big one, a charge of almost $900 million that they had to set aside just for lawsuits, and that was just in this one quarter. So Visa's argument is, look, this is a one-off thing. It's not part of our day-to-day business, so they pull it out to calculate that non-GAAP number. Understanding this is so important because it lets you see the company's health from two different angles, the official score and the score that they think really shows their true operational strength.
Okay, let's switch gears and look at the actual operational numbers. What are the day-to-day activities that are fueling all this incredible growth? This right here, this is the engine room. Payments volume, that's the total amount of money spent on all Visa cards, grew by a really healthy 8%. Process transactions, which is just the number of times people swiped, tapped, or clicked, grew even faster, up 10%. But the real star of the show? Look at that middle number. Cross-border volume absolutely exploded, up 13%.
And that 13% growth, that is a huge deal. It's a direct reflection of two massive trends: the global rebound in travel and the just relentless growth of international e-commerce. Seriously, every time you buy something from a website overseas or use your card on vacation, you're feeding into this super profitable part of Visa's business.
So when you have a company that's this profitable and growing this fast, it generates a ton of cash. The question is, what do they do with all that money? Well, a huge part of Visa's strategy is to give it right back to their shareholders.
Get ready for this number. In fiscal year 2025 alone, Visa gave back a staggering $22.8 billion directly to its shareholders. And they do this in two main ways. They either buy back their own stock, which makes the remaining shares more valuable, or they pay out cold, hard cash in the form of dividends. For any investor, this is just a massive sign of a mature, healthy, cash-printing machine.
And speaking of those dividends, Visa's board just announced they're bumping up their quarterly cash dividend by 14%. Now, a move like that is so much more than just a number on a page. It is a huge statement of confidence from the top brass, telling the world they believe they're going to keep generating tons of cash for the foreseeable future.
So what's the big takeaway here? Look, there's no doubt Visa just had a phenomenal year. But remember what the CEO is talking about: AI, stablecoins. The world of finance is right on the edge of some massive, massive changes. So the real question is, can this absolute giant use its size and its focus on innovation to not just survive the next wave, but to actually lead it? And that, my friends, is the multi-trillion-dollar question.